Be careful. Take your beer goggles off right now and really understand and listen to this video because you must be careful in this market right now. Valuations are stretched, and I expect the market to be choppy given that we are at record highs. All NASDAQ, SPY, Dow, we're sitting at record highs. And this means that you must be careful and you must make smart decisions. If you make smart decisions, you will absolutely beat the market. If you end up making mistakes, you're going to end up losing money. Valuations are reaching levels that historically align with pullbacks, okay? Valuations, the higher they get, the worse it is because you're paying a higher price, okay? I'm still very bullish on the market in general in 2025 and for the rest of the year, and I'm very bullish due to AI, but I want you to consider the information that I'm going to give you in this video to help you have an advantage over other investors and make smarter decisions. By the way, I'm going to be covering my covered call strategy and how to use that in this type of market tomorrow. So make sure you're subscribed and watching for my video tomorrow. Despite soaring valuations, fund managers are still showing mostly confidence. We have a lot of fund managers that are fully invested and they're not holding a lot of cash. In fact, they're at less than 4% cash right now. And they're especially investing in small and medium cap stocks, thanks to earning strength and domestic growth tailwinds. However, smart money is leaving certain stocks and they are de-risking. We don't really notice this, but from my conversations with smart investors that are working on Wall Street, that are managing money, they are preparing to be more defensive and they are thinking and actively hedging their positions using options. The top 10 stocks now account for over 37% of the S&P 500, near record highs. This concentration means weakness in just a few can really drag down the entire broader index. And it means that the top 10 stocks have increasing risks because they can pull back a significant amount, 5 or 10%, and that can be a very big deal for anyone's portfolio. What I'm specifically looking at is softer US inflation data, and this has boosted hopes of Fed easing and sending indices like the S&P 500 down, NASDAQ higher. And that's been one of the biggest catalysts in the market and why the market is going up. But core inflation remains elevated at 3.1% annually. Core inflation strips out food and it also strips out energy prices, which are more volatile. And this is the Fed's preferred measure for long-term inflation trends. I talked about it before in my videos how the CPI data that comes out is very much manipulated. And in my opinion, CPI in general is a very tricky number to look at. And that's because the government, I believe personally, they don't really want us to understand how high inflation actually is because, for example, they can manipulate the basket of goods that the CPI is looking after by substituting one for another. For example, instead of beef, they will change beef in the basket and only calculate the price of chicken instead, whichever is more favorable for them. And they can do this because chicken is kind of a substitute for beef. I don't know about you though. If I want beef, I want beef. I don't want the government telling me, hey, chicken is a substitute. It's similar. It's not really similar, okay? So I'm a bit concerned that we do have elevated inflation. And, of course, if you live in America, you know how expensive things have been getting. So at 3.1%, this is still like above the Fed's 2% target, which means that central banks may not actually rush to slash rates as much as the market hoped. And this, in translation, is really the good news on inflation might actually not be so good news. It might actually be overstated. And if the Fed decides to remain and stay cautious, then the market could be disappointed because, well, we're kind of all hoping here that there's going to be an interest rate cut. So if they don't cut enough, then the market's going to be disappointed, and the market moves based on investor psychology. It's all based on what other investors are doing and expectations. The market is an expectations game. So it's very important to understand the psychology of other investors and what's going on in the market. So I expect volatility to pick up. We have had a little bit too much good days, too many green days in a row. So again, I'm not a bear. I'm definitely not bearish. One of my students just sent me a picture of like a bull because during my coaching call in my Discord, I was like, I'm always a bull. So just like get a picture of a bull and write Henry on it. And markets always go up over long term, which is true. So markets will go up long term. But in the short term, I do expect volatility. And August is historically a high risk month for equities. And this week is packed with CPI, PPI, retail sales, and consumer sentiment data. And these are all potential volatility points. Also, it's really interesting because China's semiconductor deal is very massive for both AMD and NVIDIA. So they regain access to sell lower tier AI chips to China, but they must hand over 15% of sales revenue to the US government. So, said many times, we're going to be selling to China because there's too much money to be made, and that's exactly what happened. So, it's really a rare precedent that boosts revenue but pressures margins overall for NVIDIA and AMD, and it really highlights geopolitical risk embedded in tech stocks. So, tech stocks can have tremendous moats and very strong businesses, but now we know that there is geopolitical risk. I mean, that's just that. Now, I also want to cover some sectors and stocks I've been doing a little bit of research in. These are not traditionally stocks that I cover, but one of them is CoreWeave. So, high growth AI infrastructure name with Microsoft being 62% of the revenue, OpenAI, NVIDIA as partners. Very, strong company, but it ended up breaking the downtrend, and earnings on August 12th could really swing either way. So we're like in the end of the market. So very interesting to see what will happen there. I know it's a very popular stock that I'm not invested in personally, but I wanted to cover. Also wanted to talk about Uber. Cash flow is strong, revenue is accelerating, but there's still a lot of macro issues that could happen for ride sharing in general. Dell, so I think that Dell is actually an interesting stock because it's kind of like old school, but it's really an AI sleeper pick, which is already up about 10% recently. So I can see the stock doing pretty well. So I just wanted to point out, guys, that in a market that's going to be more volatile, tomorrow's video is going to be about covered calls and hedging your positions and how to use covered calls to generate income and go, higher on the delta, for example, to hedge yourself and protect yourself. I think that's really smart. A lot of people are like, no, I don't need options. Whatever. I'm just going to hold stocks. But no, options actually help you hedge your portfolio. The whole point of option trading is hedging. Like, that's kind of why they were made, right? And then people started to gamble with them. And then later on, people, and this is before my time, but people generate income with them, right? On YouTube and on the internet, I'm early, right? But in general, I'm not early because people have been selling options for a long, long time, generating income. But in terms of the information era, YouTube, I'm the earliest that talks about options selling as a form of income. So I guess that's a fun fact there that has been very profitable for me personally and has been a big contributor to me being able to essentially retire and building a portfolio that's been generating good income, in the multiple seven figures, which allows me to travel. You guys see me in hotels often, still traveling. At some point, I'll have a house of my own, but still traveling before I have a family and kids and stuff like that. So the next stock I wanted to kind of talk about is Tesla. So I think Tesla's been recovering very well. It's just people, it's interesting to see because Tesla pulls back. People get all, should I sell the stock? Should I get out of it? And then it goes up and people are like, should I buy it? Should I buy it? How about you just don't do either? How about you just hold? What about just holding, right? People are getting out of Tesla, into Tesla, but truth of the matter is if you just hold the stock and do covered calls, you'll perform pretty well, right? You'll perform pretty well. Also, one thing I wanted to point out is that Berkshire Hathaway has an underperformance. So they're down 25% versus S&P 500 over the past 5 years, which is one of the biggest lagging 5-year periods that they've ever had. So this could actually be a really good contrarian buying opportunity. A contrarian is an investor that kind of goes against the grain and goes for more value stocks, which is what my education's actually in. So my education in finance, analytics, and economics, formal education in college really teaches you value investing. So I think that's really important to realize, especially when the market continues to hit record highs. You can definitely ride tech stocks, and that's fun, and that's what a lot of people do. But I do think it's also smart to have some of the safer stocks, and that's what I am doing in my Discord. For example, like a stock that I personally like is Kraft Heinz, very safe business, low multiples, cheap valuation. So I think having value stocks is important, especially in a time where stocks continue to soar to record highs. It's important to diversify and have different stocks in your portfolio, some that are going to benefit from more increased valuations and more of the market running in momentum, which is the most likely base case scenario what's going to happen. But my video here is a little clickbaity and all that, because you have to kind of do that on YouTube. Everyone uses all these clickbait titles, but I really do mean it when I say that kind of game over, in the sense that I think the easy money is not that it's past us, but the easiest money has already been made. So I think right now it's important to just really focus more on the generating income, hedging, using options, being in these high growth stocks. They're going to continue to likely run, but we're going to probably get some down days. Like, it's just impossible for the market to just go from like the here to here, right? And I actually see that a lot of you guys that are scheduling calls have been like kind of weary and like canceling calls, which is fine. Like, I appreciate if you book the call that you cancel it, because then you save time from me and my team. But I can see kind of like the uncertainty even amongst you guys and the investors that are even thinking about coaching, for example. And I think this is one of the best times to get coaching, specifically because we're in a market that's unpredictable. In an unpredictable market, you do want help. You do want to understand how to navigate and how to react to both of the volatile sides. The one volatile side is just massive growth. How do you capitalize on that? And then, what if we do get more volatility? It's not always going to be sunshines and rainbows, and that's fine. That's also when you want to really understand how do you hedge, how do you protect. So either whatever side we get, it's important. I think it's important to get coaching. And of course, I am a coach and I sell coaching, but it just really makes me think about it, because I've been doing this for such a long time in investing. And then when I see people with questions that are like, what do I do right now, and how do I hedge, how do I make the most out of this? I think to myself, wow, like it's amazing to get help and to get ideas from a community, from someone else, because it's easy for me. But it's only easy for me now because I'm so deep in it, and I continue to remind myself, because I'm so far removed, and I've had my journey already a while ago. Like, I've already made the money. I do remind myself how important it is, if I was a beginner, to get help, to understand this market, to profit from it, to use option strategies to hedge. Well, that's a really huge impact that you can have on your portfolio. So, anyways, yeah, you already know the deal. I'm happy to work with you if you want in the first link description. Please be careful in the comments. There's a lot of scammers and pretenders and impersonators. And then tomorrow I'm going to make a video on covered calls and how to generate income with covered calls, like the deltas and stuff to pick. So make sure you're subscribed, and I'll catch you in the next one.